All right, good evening, guys. My name is Patrick, and today we're going to be talking about the unfair competitive advantages that China is experiencing. So, the first part of the case mentions the intellectual property protection. This has been an ongoing case of discussion globally for a long, long time, and China historically has not been the leader of intellectual property protection in the world. China is actually pretty notorious for allowing leniency with certain parties that are domestic to violate certain IP laws without really being judged for it even. They're not forced, like the example that I give in the video or in the slide is a fake Apple store. And I remember watching this documentary on how these fake Apple stores operate. The products inside are so identical to the real thing that you wouldn't be able to tell unless you are trained for that task. And these stores are everywhere in China, and nothing is really being done about it, which obviously irks Apple quite a bit. And Apple is an American entity, obviously, but there's also frustrations among other members in the EU that are negatively affected by these kinds of property protection, intellectual property protection restrictions. So the possible solutions for China moving forward, right now there's a lot of opaqueness happening, so foreign investors aren't really sure about what's going on and how to exactly pose their money in that market. The filing for intellectual property in China is a very complex process, and there's a lot of bureaucratic loopholes that have to be jumped through. So by increasing the transparency in that process, I believe that China could gain a more competitive edge when it comes to securing foreign investors. Like I said, transparency is one of the deciding factors for any investor. So that is one of the main tenets they're going to be looking for. Patent fees for registration are quite high, so there's a lot of barriers to actually getting a patent registered in China at the moment, which deters many investors and inventors as well, because holding a patent there is quite difficult. From the time that you start the process to the time that you actually receive your patent, takes quite a long time. So by shortening this process, obviously, it would be beneficial for China as well. Government agencies that are tasked with strictly protecting the intellectual property have been established now in the recent years, but when this case was taken in that snapshot of time, they had none. So there's no regulations in that sense. Judicial protection is another very important aspect of it. Without the right judicial protection, what is really keeping other people from stealing your patents? And the bureaucratic ease with which that China just greets its investors in general. How hard is it to get a patent protected? Continuing on, the case mentions health and safety standards. China has notoriously been having a dodgy past when it comes to these things because of recent experiences of American consumers and European consumers with toys and food and other things. There was melamine in the food, which was actually causing quite a bit of liver failure in the affected subjects, and as well as diethylene glycol in the toothpaste, which was quite weird. It caused 200 people to lose their lives before it was even remedied. So they were actually able to sell that product knowing what was inside of it. And just children's toys that are generally not acceptable because they break into a million pieces if they do break, or the materials used contained lead, arsenic, or other toxic materials. One thing to also touch on with this is that one mishap can really shape your future when it comes to this, because China still carries that notoriety today for things that happened in the 80s and 90s and 2000s. So one little mishap can really give you a certain image in the public's mind for the years to come. And the picture was just about these dog beds that had all these toxic chemicals in them. And especially in America, people care so much about their dogs that these kinds of things just detract from the general willingness of the consumer to go and purchase products from China, in my opinion. So, is there an unfair advantage? The simple answer is just yes, there definitely is. The labor and environmental laws that are in play in China are just so lenient for domestic companies compared to the rigorous regulations that US and EU companies have to adhere by. So, because of this, they can have lower production costs. Oftentimes, this leads to lower product quality as well, but that's beside the point here. The point is that low production costs open up more capital for the business to do other things with, and they can sell their products for a much lesser price than the European or US based companies can. And this undercutting is what's really frustrating a lot of these other companies based in different countries. So unfair markets tend to lead to no competition, because me as an investor, why would I want to keep my money in that business when I can just liquidize my assets, take them elsewhere, and for example, invest in a more risk-averse portfolio through currencies, gold, silver, or something like that. So the general mindset here of investors, they don't want to lose money in their business. And with the way that regulations and these production costs and stuff like that are going right now, there's really no point in trying to compete with Chinese companies in the same industry. Will the advantage stay unfair? This is probably also going to just be yes. China's upper middle class makes up more of is a larger number than the US population. So realistically, how much are they relying on Western sales in general? Right now, a lot, but we'll get to that in a minute. The government is really profiting from the advantage as well. So there's no reason for them to want to change it. The way that things are going are profiting both domestic businesses and economic growth stimulus in the Chinese government. So there's no reason to change anything from their viewpoint, or just a business viewpoint in general. So they're going to continue to keep selling their products at low prices. And another issue is, since China has been a member of the World Trade Organization since I think 2001, the problem has been it's such a large member of the market, and everything kind of depends so much on the play in between all the members of the market, that the World Trade Organization doesn't really want to regulate China in that sense, because any regulations might just fall on deaf ears, and they'd rather just not even go there and attempt it. So what is this all leading to? A lot of people are going to disagree with this, I'm sure, because the strength of the US dollar is a sensitive subject, to say the least. But from what I have gathered and seen in the case, and just overall, this is what tends to be happening and slowly is occurring. So the People's Bank of China controls the yuan, much like the Fed controls the dollar through QE, quantitative easing, or through just general inflation to keep the economy as stable as possible. This is what these entities are tasked with in both countries, the United States and in China. The problem is, in China, the PBOC pegs the yuan to be within a tolerance of the United States dollar. So it used to be 2%. I'm not sure what it is now, but it's close to that. So they always want to stay very close to the US dollar in terms of value. But since the production costs are much lower and the value of the dollar still compares to the yuan, their exports are always going to be selling cheaper than what the products sell for in the American markets, because, once again, production costs. The American companies have to spend a lot more on their employees, which detracts from which adds to the overall cost of the product, which then is charged back to the consumers ultimately. So the People's Bank of China also keeps the yuan artificially low, in the sense that they don't want it to be stronger than the US dollar at the moment. It would not be favorable for China to have a stronger reserve currency than the US dollar at the moment. So they don't want the yuan to surpass the dollar right now. What artificially keeping the yuan low has the side effect of strengthening the US dollar. This will add to the general benefit of the Chinese government that I'm going to explain soon. The US dollar acquired from sales that are exports is not exchanged back into yuan. So a Chinese company sells a product in the American market. You would think they receive dollars and then put it back into the currency that they are domesticated with, right? Which is the yuan. But this is not the case, because what they actually do is, to cover their employee salaries, they do translate that into yuan. But that's a minority of the entire revenue stream, right? So the rest of the revenue stream is kept in US dollars and stored at the People's Bank of China. This in turn then is used to purchase US Treasury bonds. So this is where our Chinese debt is coming from. Whenever you hearing about Chinese debt, this is what it means. It's just Treasury bonds. They're purchasing a bond that the debt is owed by the United States, right? So because they're holding it at the PBOC and it's not within circulation, it actually, once again, strengthens the value of the dollar, which is currently quite convenient. Like I said, it lowers the circulating supply in the global economy, strengthening the US dollar. But remember that the PBOC now holds those treasury bonds in US dollar. So a stronger dollar would be preferable in terms of the value of the debt that they're holding. So the amount of that debt is now at $1 trillion, which Japan has actually more treasury bonds than China does. But at the moment, there are drastic measures being implemented by the United States to try to reduce this amount. And it hasn't really worked because they've been holding $1 trillion of debt for like the last 8 years. So we will see how it goes on in the next few years. But the problems that arise from this, and this is all theory crafting much more than based in fact so far, but you could definitely see, hopefully, where I'm going and coming from with this. The dollar is so strong right now because it's used as a currency in global trade. All companies can interact in the US dollar. So much more than a reserve currency, it's a global currency and a reserve currency. So this is the most important thing. The strongest currency in the world will always be the currency that's used globally, right? This is kind of common sense in that way, right? So the political implications of the financial leverage that China has through this accrued debt aside completely, there's a possibility that they can cash in on these treasury bonds, which would have an incredibly detrimental effect to the US dollar's value and the US dollar's position as a world trade currency and a world reserve currency at the same time. So slow redemption of these bonds can detract from the attractiveness and value of the US dollar for foreign investors, I would say. So as we've said many times now, the downfall of the US dollar right now is not favorable for China. They're still holding the bonds. Right now, the dollar being the reserve currency and the currency used for global trade is convenient still. But my question is, eventually this might change because currencies come and go. Usually wars decide who gets to have the best currency after. So either it would do for a war to decide, hopefully not, or economics will take its course. But right now, the sales in the domestic and Asian territory markets around China aren't high enough to just completely drop the US market and not care about the sales, especially because the sales are quite profitable at the time. But there might come a turning point where China doesn't care about the US market anymore because they've reached that threshold where their GDP is growing enough and they have enough economic growth in general in the country where they can ignore the US markets and just sell the domestic and Asian territories. And then what this enables them to do at that point is they're not reliant on the value of the dollar anymore. So they can sell all their bonds immediately, causing, in Forex trading and stuff like that, panic selling. One person does one thing and then the whole herd kind of just jumps in for whatever reason. And groupthink, I suppose, is one of the main reasons. But when they panic sell, it would lower the attractiveness of the dollar, like I've mentioned, and it lowers the strength of the dollar in general. And the position of the dollar over the yuan as a global reserve currency is the number one thing that's sourcing its strength from at the moment. So the problem is they can just change the artificial suppression, right? There's nothing keeping the yuan at its value other